Welcome to the Transparent FX Academy. I'm Nick and I'm a top author on TradingView with over 190k reputation points. In this video, I will be speaking about USDJPY. Now, as usual, to keep the video as educational as possible, first, I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, so essentially what hedge funds and the big players in the market are doing and how they're moving their orders. And by the end of the video, by using the combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss. If you're new to the channel, make sure to subscribe. This is the place to be for high quality free trading education. So without further ado, let's jump straight onto the charts. Starting here from the monthly time frame, what we can see is that we have a market which at the moment is testing and rejecting a quite strong monthly structure zone. In fact, this level was acting as previous monthly resistance and supply. Then the market broke above that zone with this impulse. And what we know is that previous resistance, once it gets broken to the upside, becomes support. The market has in fact tested that this previous resistance turned support and has already started rejecting it to the upside. So in a situation like this, we could expect more bullish price action to be created away from this area. So the monthly time frame seems quite bullish. Now, dropping down on the weekly time frame, what do we see? Well, from a weekly standpoint, we can notice a quite strong impulse to the upside, followed by the correction. Now, the market is pushing higher. In a situation like this, once again, more bullish price action could be expected. We can also notice that from a pattern standpoint, we had a clear impulse followed by this correction. And in general, after an impulse, if you want to measure the correction, what you have to do is take your Fibonacci from the low to the high of the impulse leg. And we can see how the market stopped precisely at the 0.32 Fibonacci retracement, which is exactly the Fibonacci level at which you expect the market to stop when you have a strong bullish trend. In this case, if the impulse was to the upside, or in the case of a bearish impulse at the 0.32 of the bearish trend. So from a weekly perspective, everything seems quite bullish and more bullish price action could be expected. Dropping down the daily time frame, what do we see? Now, from a daily perspective, I did speak about USDJPY just a few days ago when the market was around this area and explained all the reasons for which we could expect this potential rejection to the upside, which is in fact exactly what the market gave us. And by the way, you will find that previous analysis linked in description, so you can go and check it out for more free education. Now, in a situation like this, what we can see is that we just had a massive rejection to the upside. Now, since we had the break above all resistance, which was at this area, now this previous resistance has turned support, but also the previous high has already been broken to the upside. So actually all this area here, which was previous structure, is now turned support. Now, as we did previously, since we have an impulse to the upside, if we want to measure a potential correction, also here, we have to take our Fibonacci from the low to the high of the impulse leg. And what this shows us is that we have the 0.32 Fibonacci retracement inside of this structured support zone. Therefore, what we can identify is that all this area is actually confluence of support. And what we can expect here is a potential retest of this confluence of support area, and then to see some institutional longing inside of this zone, which at that point could further increase the probabilities of a potential push higher away from this level. Now, if we go and see what we have when it comes to the commitment of traders, the COT data, so essentially what hedge funds and the big players in the market are doing, and we check the data precisely for the JPY, we can notice how in the long run with the last reports, net positions have gotten massively decreased. We went from minus 55.5K, this was at the high, all the way down to minus 102K. So essentially net positions in the long run got cut in half, meaning that institutions are massively moving to the bearish side for the JPY. And since every currency is traded against the USD, if institutions are shorting the JPY, they are essentially longing USDJPY, therefore making it stronger. And in fact, we have seen a massive move to the upside. Now, If the market will go and retest this confluence of support, we could expect instead of this confluence of support to see more institutional longing of USDJPY by shorting the JPY, and that would further increase the probabilities of a potential rejection to the upside away from this level. And by the way, if you still haven't, make sure that you join my free Telegram channel, which you find here on the screen and also linked in the description, so you never miss new updates. Now, back to the analysis. As I was saying, if the market will not correct to this area, and it is a confluence of support zone, inside of which we have good probabilities of seeing institutional longing, what would I expect in a situation like this? Well, as usual, trading is reactive and not predictive. The monthly, weekly, and daily timeframes combined with the COT data, those are the best timeframes when it comes to the directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best timeframes for that are the intraday timeframes, so 4 hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bearish to bullish market at that point, I wouldn't be surprised to see a potential push higher away from this level, completing this daily impulse correction and impulse pattern to the upside. Now, if you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website, which you find linked both in description and on the main page of my YouTube channel. Here, you have the possibility to gain access to the most complete all-inclusive mentorship program that I have created for you. As soon as you open the website, you will see this video breaking down everything included in the mentorship program. And in the program, you have the possibility to gain access to all my courses and also to the software, so the COT data software, which is exactly the one that we used in this analysis, the trading station software with Telegram signals integration, which puts together everything that you need as a trader all in one interface. You also have the possibility to gain access to one-on-one private mentoring directly with me, so you will have my personal contact. And if you continue to scroll down on the website, you will see that directly from the website, you will have the possibility to register and gain automatically access with the email and password that you will create during the registration process. So at least I suggest that you go and check it out right now. The link is both in description and in the main page of my YouTube channel, and I will see you in it. If you enjoyed the video, make sure to drop a like. Also, if you have any suggestions on any topics or pairs that you would like me to cover in the next videos, make sure to drop them in the comments below, and I will see you in my next video.